NVIDIA's stock really powered by its own, undeniable AI innovation? Or is it just running on pure, unadulterated hype? The charts seem to say one thing, the fundamentals maybe another, and the options market, well, that's placing its own bets. It's kind of a battle of narratives we need to sort through. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Working with data before market open on August 26, 2025, we're diving deep into NVIDIA, ticker NVDA, using our research. Let's get into it.
And you can feel that tension in the broader market this morning, too. It's cautious out there. S&P, NASDAQ, Dow futures, they're all pointing just slightly lower for the open. Plus, we heard from a Moody's chief economist warning that nearly a third of the U.S. economy might be at recession risk. So, yeah.
Oof.
And there's a flood of economic data dropping today. Durable goods, consumer confidence. Expect some bumps, some volatility for sure.
Right. Okay, so against that backdrop, you've got NVIDIA, this innovation machine. Our core conflict for this deep dive seems pretty clear. Can its relentless progress actually justify valuation that already feels, well, priced for perfection? Because, on the innovation side, NVIDIA is just relentless, right? They've just launched Jetson Thor for General Robotics, a new Spectrum XGS networking fabric, which is, super important for AI superfactories. And they're even bringing the Blackwell architecture to GeForce NW. Analysts are already bumping up price targets ahead of earnings tomorrow.
Oh, absolutely. The innovation is, it's pretty staggering.
Yeah.
But, and this is the big but, when we look at the valuation, our models, based strictly on cash flow and earnings, they suggest a fair value somewhere between, say, $155 and $165 per share.
Okay.
So with the stock trading near $180 right now, well, that looks significantly overvalued based on those fundamentals. And it seems Wall Street is kind of wrestling with this too. You see it in the analyst ratings. 68% are sitting at hold.
68%.
Yeah, they see the amazing tech, but they also see that stretched price tag. It's conflict.
So, okay, our fundamental models are definitely leaning towards the hype side of things, warning about the valuation. But what about the traders, the sentiment? Are they still buying the innovation story despite those numbers? What's the options market telling us?
The options market. Yeah, that's often where you see the short-term conviction. And right now, it's decidedly bullish. The put-to-call ratio is low, down at 0.65. That means traders are buying way more calls bets the stock goes up than puts, which are bets it falls.
Interesting. So more optimism there.
Definitely. And you can see key levels forming. $185, that strike price, is acting like a big ceiling of call options resistance. And on the downside, $170 looks like a fortress built out of put options. That's seen as strong support.
Got it. $185 resistance, $170 support.
Exactly. And maybe most telling, the short interest is tiny, just 0.82% of the float. Almost nobody is actively betting against NVIDIA right now.
Wow. Okay. So fundamentals flashing warning signs on value, but sentiment, especially in options, still very bullish, very few bears. What about the technicals? Do the charts line up with the cautious fundamentals, or do they back the options traders' optimism?
Well, the charts, they kind of have a split personality right now. First off, the long-term trend, clearly still up. The stock's comfortably above its key long-term averages, even with the recent small dip.
Okay, trend is still positive overall.
But then you look at volume. And it's mixed. Some buying volume looks strong, sure. But another important gauge we watch is quietly suggesting that the selling we saw recently actually had more conviction, more force behind it than the buying.
Okay, so underlying weakness maybe.
Could be. And here's where it gets really interesting. Momentum. Several key momentum indicators are pretty strongly signaling that momentum is fading. The buying enthusiasm seems to be waning.
Like RSI or MACD type indicators?
Yeah. Exactly, those, yes. And the short-term trend lines, they're actually showing a bit of a bearish pattern forming. And volatility, well, the daily price swings have been pretty big lately, but there are some signs it might be starting to coil up, consolidate, maybe getting ready for its next big move.
Wow, okay, so we've got these amazing new products, bullish sentiment, smashing up against this concerning valuation, and technicals showing, well, fading momentum, especially with earnings literally tomorrow. It feels like everyone's got a different piece of the puzzle. So what does this all mean for you watching NVIDIA today?
Yeah, it's a tricky setup, especially heading into earnings. With these conflicting signals, the great tech versus the high price and weakening charts, our playbook today is probably more wait and see. It's about knowing the key levels the market is watching. That $185 resistance, that's the bull's challenge. Can they break it and hold it, proving the innovation story wins out now? And that $170 support level. For bears, or maybe just for folks looking for a safer entry point. You watch that closely. If it breaks below $170, that could be a sign that the fading momentum is really starting to bite.
Right, a break below could signal trouble.
Exactly. So it's less about jumping in immediately and more about watching how the price reacts at these critical points defined by the options market, especially with news pending.
It really feels like NVIDIA today is like that quietest car on the roller coaster,
Yeah.
Right at the very peak, before maybe a big drop or maybe another climb. Hard to tell which way it's going to go. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of De-Risk.